to wrap it all up, what I just said, all that stuff that I just said, okay, it means China is accelerating, stepping on the gas of, um, for lack of a better word, going back to your meme, a monetary reset. And that's, just on the China side, okay, of the equation, tells me that this is definitely not a bubble, okay, for gold and silver, but in fact, a I wouldn't say the monetary reset is an event, it's a process.
Tuesday, June 3rd, 2025, Maneco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Eric Yeung, good friend now. We met in London. We haven't spoken for a while, Eric, but I wanted to talk to you, yeah, about gold and silver, of course. And one topic that's probably going to be bandied out by the mainstream financial press is whether gold is in a bubble. You and I know that it isn't. So, yeah, welcome, and maybe you can touch up on that as a first topic.
Well, Mario, thank you for having me on your show again. Really appreciate it. So, yeah, to start off, I guess, you know, looking at what's going on right now, and we talked a bit off camera, the Shanghai Gold Exchange is now going to start um, allowing foreign investors to invest directly at the um, at the Chinese futures exchange for example, gold, silver commodities. Now, how does that tie in with your meme that you just showed, right? Like, that right now, at least we think, it's just not gold and silver is not in the bubble, but perhaps it's actually a real monetary reset. Now, um, look at what China has been doing in the past 6 months. So in the past 6 months, what China did was it really opened up its gold markets. Okay, not only to its citizens inside China, but also externally. What I mean by that is look at what China did. So the first thing China did in the beginning of 2025 was to start the gold accumulator program, which ties the Shanghai Gold Exchange, which is the physical gold exchange, gold and silver exchange in China, directly to its commercial banks and to its consumers. So as a consumer, now you can buy physical gold, unlimited amount, from Chinese commercial banks, which directly withdraw that physical gold from the Shanghai Gold Exchange. Number two, what did China do? China allowed its insurance companies to use 1% of its under management to purchase physical gold as a pilot program. So there's a lot of chatter in China and also in the West, within the gold and silver circle that 1%, if the pilot program goes well, may rise, right, in percentage. It might get to 5%, 10%, etc. At 1% right now, it represents around 300 um, metric tons of physical gold demand per year.
Yeah,
And
and
this is
about
not from me, right? Sorry.
yeah,
Yeah,
about $27 billion worth, right?
correct. And that's from Bank of America's research department. So 300 metric tons. That's a lot compared to the annual physical gold withdrawal from the SGE, which is approximately 1,450 metric tons. So that's like over 20% increase in physical gold consumption in China. Okay, right off the back. And then what else did China do recently? Well, it announced that the SGE is going to start um, establishing physical gold vaults offshore. So they already started doing it in Hong Kong. Okay, like China mainland China considers Hong Kong offshore because it's a different system, as me and you both know, Mario, right? It still runs, um, primarily on the colonial system, British colonial system. So the um, the Hong Kong vote is established, and with the framework that China has proposed here, it means that in the future, China, the SGE can establish physical gold vaults at places like Singapore, Saudi Arabia, Dubai, right? Why is that important? And I think I discussed this in other programs. It's because if China wants to get away from the US dollar and the US treasuries, right? It needs to offer its trading partners assurances that whatever RMB yen that they accumulate can be immediately converted into physical gold. Okay, they can already do that at the SGE in Shanghai, but the offshore um, physical gold vaults at the China's trading partners jurisdiction give them the ultimate assurance. That means that the physical gold is residing at the trading partners, you know, own country, own jurisdiction. Okay? So that's what that is. To wrap it all up, what I just said, all that stuff that I just said, okay, it means China is accelerating, stepping on the gas of, um, for lack of a better word, going back to your meme, a monetary reset. And that's, just on the China side, okay, of the equation, tells me that this is definitely not a bubble, okay, for gold and silver, but in fact, a I wouldn't say the monetary reset is an event, it's a process. Okay, so what is happening now is a probably in the initial stages of the monetary reset that you showed on your meme.
Yeah, I agree with you 100%. And like what that will uh, result in is a much higher price. And like you said, this is the Chinese part of the equation. We haven't really been told officially what the US or even the EU wants to do. If anything, we've been told by the ECB that gold could be the cause of a crisis, financial crisis, which is totally backward in my opinion. The other thing that now putting two and two together makes me realize that this is official policy, what you've been talking about of making the yuan, RMB yuan, more of an alternative for China's trading partners is that the major Chinese banks, they were members of the LBMA up until I think 2022. I could be wrong about the date, but they all left. And at the time, it was weird because everyone was asking the question, why they're leaving. But now we know why, because they want to create their own kind of LBMA. And I think what they're doing now answers that question. And Eric, I'm going to bring up a chart here that I did yesterday because of this question. When people say, oh, gold is going to correct to 1700, it's in a bubble, so and so. And I br- I designed this chart here going back to the well pre 1971 even, but What you probably know, like maybe the viewers don't know, a teacup and handle formation usually is a very bullish formation. It's a period of consolidation, or it's like a period where the market stays like kind of controlled and doesn't go up. And if you look back and all the way to the early 70s, there's been five teacup and handles. And what's interesting, Eric, is that this fifth one is the latest one, but it started in 1980. And then you draw it with the top in 2011. And actually, we actually just broke it like last year. And I'd been looking at this line quite a bit even before it broke it, and I thought 2,700 is going to be the key level, and it kind of was. Yes, after the election in the U.S., we had a little blip here. It retested it, but to me, if you look at the previous teacup, especially number three, after it breaks out, yeah, gold barely stops for. I mean, this is a quarterly chart, so it cuts out the noise. But if you look at it, I think there's a lot of room, and this is the technical picture for what you talking about a reset, and that we're just starting. And like you said, it's a process because a lot of people think we're gonna wake up one Monday morning and gold is gonna be reset in price, but I don't think it's like 1934 because nowadays gold is not really officially fixed or part of the monetary system.
Yeah, I agree, Mario. I think like I said, this is the beginning of the, maybe the end of the beginning, but it's still the beginning. And other indicator that I see is that Hong Kong is a really good indicator for, you know, for sentiment. What I mean by that is that if you look at you don't read Chinese, Mario, but I do. And I go through all the major media channels in Hong Kong, all their Facebook
I wish I
pages,
could. I wish I
and
could.
and you'll be shocked if you read some of that stuff. And one thing that I mean is this is not a secret. Everybody knows this. If you go through all the major newspapers, online media, right? Like Business Focus, AM 730, Hong Kong 01, whenever they talk about gold or finance, right? You'll find that 99% of the people who are posting are what I call milkshake simpletons. Okay? I I mean I talk about that on my X account. And what I mean by that is they flood the comment section. Like, I mean, I can't get a word in. I'm not kidding you. It's 99%. It's, oh, gold is garbage. The US dollar is going to reign forever, right? And it's 99%. So my indicator, because these people are usually always wrong, okay? You know? So one of my indicators is that as long as these people are trolling gold, for lack of a better word, or discouraging other people to, buy gold and silver, I think we still got a lot of runway. I mean, like, that's really simplifying it to the nth degree, but what I mean by that, what I just said is that, these guys, they are probably more um, US hegemon or American exceptionalism than the Americans themselves because they lived through the glory days of colonialism. Okay, they benefited. and me and you talk about that a lot, right, Mario? Right? About like when the Brits used to rule Hong Kong and Hong Kong did well. So their mindset is still back in the 1980s,
Yeah, and
the 1990s.
Yeah, Hong
Yeah,
Kong dollar as well. It's been pegged to the dollar for decades, hasn't it?
correct. Yes. So anyway, I can't get a word in, on those comment section because they flooded and they have no, there's no analysis really. It's all emotional outburst, basically. Okay. And you know, and like I said, um, that's one of my major indicators. Okay, going
Yes.
forward.
Yeah, that's
Okay.
interesting. So when
Yeah.
you don't see too many milkshake simpletons around anymore, that means we could be in the mature bull market. So it's still early days. That's what you're saying, right?
Yes, I'm saying that, and believe it or not, like we had a really good day yesterday with gold and silver.
Yeah.
Guess what? I see the first thing in the morning. People come, WhatsApp, private messaging me and saying, "Oh, we reached the top. It's gonna dump from here." I mean, gold and silver is probably, especially silver, right? Probably the only asset class in the world that you have like a really good day and then you have a slight dip and everybody thinks it's game over every single time. That's what I noticed.
Yeah, I mean, I've
Yeah.
been following gold and silver since 2002 because that's when I first bought gold. And as you know, I was working in the financial market, so I was watching it 24/7. Uh, I didn't really trade it for my clients. I did government bonds, but yes, I'm pretty much immune right now, and I think that's what I like to tell my viewers. Yes, hold on to gold and silver for dear life because it's such an emotional market. Like yeah, like you said today, silver is up 5% yesterday. And now, as I look here, and it's 7:20 a.m. London, we're down 61 cents at 34.13, or down 1.7. And we almost traded up to 35 or overnight. The high was 34.92. This is spot. But yeah, you need to be really patient. I think we're very close to silver really waking up. And yeah, like you said, it's good to see these people coming out and saying, "Oh, gold and silver is topping. It's not going to go anywhere." It's a contrarian indicator, and a lot of these people they haven't had a position in gold and silver, so they feel like they missed the boat. Um, I want to switch over to the bullion banks. And in this case, Eric, I want to switch over to this guy here, Robert Gottlieb, because you know probably more about him than I do. But he was a bullion banker at HSBC and at JP Morgan, as you can see here, managing director, so quite senior. And we know that the bullion banks, they have been, especially COMEX, LBMA, the Western bullion banks, they have been the ones controlling the price of gold. They're the ones with the usually big short positions on COMEX. And but now it seems like they're changing their tune. And even though Robert Gottlieb is not working for a bullion bank anymore, this is what he says. What does it take to get a rally in gold and silver? And he says geopolitical news overnight from Ukraine and global uncertainty, gold equals safe haven. Then he says everyone needs to be patient and expect sell-offs. Well, it almost, Eric, that sounds almost like you knew what was going to happen this morning, right? However, in the long run, enjoy the ride as the trajectory is up, up, and away. This isn't your grandparents' gold. Gold has morphed into something much bigger with safe haven status. Yeah, and I think what he means by this is that it's not just safe haven status now, it's part of the monetary reset. That's why he said it's morphed into something much bigger. Maybe you have another idea of what he means, and maybe you could talk a little bit about Robert Gottlieb.
Well, I think Robert probably saw the same charts that me and you have seen. Like, um, you know, I sent you the chart from Gold Charts Russ from Nick Lair. Do you see it, Mario? Of the COMEX gold and silver. I sent it to you on X. If you can pull it up on your screen.
Sorry, I was muted, so there you go. Is that's the silver one?
That's the silver one, but the gold one is similar. So,
I'll
um,
show this the gold in a minute if you want to talk.
okay. So anyway, there's another one that shows the total open interest as well. So anyway, the open interest for gold right now is actually not as at the highs. It's actually at the lows. Okay. Um, that's interesting because usually when gold and silver prices go up, okay, like what it's doing right now, open interest would be up. What that indicates is that more people are participating in the futures market in the US, right? They're betting on either the gold price go up or the gold price going down. When gold prices go up, right? Like people are excited. So they bet, gold price is going up, and then the bullion banks they take the opposite side of the trade, they hedge and they bet it going down, right? So that mix up long, short position, mix up a new open interest, right?
Yeah.
But right now, what's happening is you have open interest going down.
Yes, the green line here. The green.
Yes. Okay. Okay. Like it's not up. You see that, right?
No,
But like,
yeah, it should be
but
up here, right?
yeah, exactly. But the COMEX eligible and registered vote, I mean, it went down a little bit after the huge ramp up in the first quarter of this year, but you see that it's not going down that much, right? There's some outflows, but that outflow, as we discussed on X, it can be just like stuff going to Switzerland. Okay, because Switzerland had like I think 60 metric ton import from the US in April of physical gold, and a lot of that went to China, right? Because China wants gold. But then it can also be, just big players in the US or US government proxies. We don't know withdrawing physical gold from the COMEX system.
Yeah.
Okay, so it's a complex system. We don't see, all the intricate moving parts. Maybe Robert sees it. So that's what I'm saying is that with the limited information that we have access to, I agree with Robert. Okay, his assessment. Almost 100%. I think, and it's funny because what Robert wrote, Robert Gottlieb, is essentially what I have been writing, on and off continuously for the last 2 years. I've been telling people, and you probably remember this, Mario, that I think in the mid to long term, gold and silver prices will rise, but for the short term, you always have drawdowns.
Mm. Yeah.
Okay, like small corrections, right? Or
Yeah, yeah.
corrections, like
Yeah,
what we're
yeah, I
seeing now,
remember that.
right?
I remember that. Yeah, yeah.
Exactly, right? So anyway, like I think bring these charts up, and you got the silver one here, right?
Yeah, and you can see here,
Really,
I mean,
yes,
open interest was huge here when silver was, at 30 back in 2020, 2021, and then it dropped. And now it hasn't gone, it's almost virtually half of what it used to be. So there's a lot of room for people to get
exactly.
involved.
And that, Mario can also indicate that the people call them the banksters.
Yeah,
They are probably reducing the short positions because they probably know what's coming,
yeah,
right? So anyway, my whole point is that we're not in the bubble. Going back to your original me, we're definitely not in the bubble. Okay, based on everything that I'm seeing.
I agree.
And like, the bottom line is Mario, maybe one day in Hong Kong, I see all the media have people pumping gold and silver. Okay? Like the Hong Kong like milkshake sims, right? I call them. And then I'll call you up and say, Mario, it's time. We are in a true bubble. But right now, I just
Yeah.
like all indicators, sentiment, we talked about sentiment, we talked about China, what they're doing officially. We talked about the data, right? Actual data from Comex. And it all points to the fact that we are not in a gold and silver bubble.
Yeah, and I
Yes.
guess yeah, most people don't realize that the situation in Hong Kong is different than, let's say, Shanghai or Shenzhen, because I think the mainland Chinese sentiment is probably a lot better for gold, and they don't know about the milkshake theory. They're not really pro dollar, so it's interesting to get your Hong Kong perspective.
Right. Well, China, the citizens, they buy physical gold, as I've said in the past, really as a form of savings. So even today, I don't see a lot of Chinese people, like not widespread, buying physical gold as a serious form of investment. Why do I say that? Let me give you an example. You have, let's say, a Bai Ma. That's what we call it in Cantonese, right? Like a big mama in China. They buy a lot of gold, right? But they would spend, let's say, 50,000 RMB, which is around 6,000 US, 7,000 US dollars. They buy physical gold. Then they shop around, they think about it a lot, and they want to pick, exactly what they want. They spend what I'm trying to say is that they spend a long time to lock in on what they want for a $7,000 purchase. But for a paper purchase, for actual investment, let's say like I don't know, like a high yield structured product at the banks, 60,000 US dollars equivalent, or 50,000 US dollars equivalent, is a push of a button. So that's still the like people look at China and they say yeah they love gold etc. Yes they do, but it's really as a form of savings. I mean, in another show, I showed the host of the show a chart of Chinese, investor, what their portfolio this distribution looks like, and physical gold and silver, just precious metals, is actually less than 5% of their entire portfolio. I mean, they spend something like 50% of their liquidity in real estate, and then probably around 30% in paper assets, and gold is around 5. But that number is going up. So what I'm trying to say, Mario, is that again, we are not in the bubble, and that number is just starting to go up.
Yeah, and
I'm talking about the Chinese,
yeah, yeah,
investing in gold
yeah.
percentage.
And Hong
Yeah.
Kong is probably even less than that.
Oh,
Uh,
they were selling gold, Mario. At
yeah,
3,500, they were lining up. I showed you
yeah.
the picture. Remember
And
the gold
look,
rabbit? Yeah.
yeah, it looks to me that the mainland Chinese, yeah, there is a speculation, and the Chinese like speculating, but as far as gold is concerned, they do it as a stacking exercise. They buy long term, like you said, they think about it and then they proceed. And uh, going back to Robert Gottlieb, the other thing I think, Eric, and it's good that we know about this guy because sometimes you get a little bit of information from them that is really important. He might be getting a heads up from his old mates, that are still in the bullion banks. So, yeah, I think it's important to keep track of what people like that say.
Absolutely. And I think, a lot of the stuff that he said in the last 6 months have actually been spot on. I mean, we might not, agree with some of his conclusions because again, like you said, Mario, he has mace at the bullion bank, so he has to protect them. But in terms of like the path where gold and silver is going to go, I agree with Robert.
Yeah. Okay.
Yeah.
Before we wrap up, Eric, just want to get your opinion on, and I don't want you to give names, but of the mining sector, gold and silver miners, how do you think? Do you think there's still? I think there's still a lot of upside, of course, because they're still heavily undervalued because investors are not like discounting gold prices or silver prices where they are, that they're like valuing a lot of these miners at silly levels. Is that the way you see it? And do you think, well, at least for me, Eric, in the last month or two, when we've had corrections, sharp corrections in gold and silver, the miners have corrected a bit, but not as much as they used to. Is that the way you're seeing it too?
I agree with you, Mario. I mean, this fellow called Garrett on on X. He's a mining, expert. He just posted something yesterday saying that a lot of the gold miners are still basically being valued, okay, with the gold price at $2,000 US per troy ounce. So
Sorry, Eric,
isn't that
that's the guy
crazy?
here,
Yeah,
Garrett Goggin.
yeah, Garrett Goggin. That's right. I
I
think he
brought him
used
up. I
to.
brought up the tweet here.
Yeah, so 2000. So I'm not making it up. It's right there. Great. So yeah, so he said, their price for $2,000, and I agree with him because although my mining portfolio, as wonderful as it is, and it went up a lot, by the way, in the last month, even though the gold price has been consolidating. It's funny because I know some good friends of mine, they were trying to catch the intermediate top and bottoms. So they sold all their miners when gold touched like $3,500. And they thought that was good timing. But the miners went up. They didn't go down in price. Like even though gold corrected like a couple $100. So these fellows ended up scaling back into the miners at a higher price. So you can say that they kind of like lost a bit of money on paper, because they sold at a low price and they bought back at a higher price. Anyway, so my whole point, to answer your question there, I think miners are just beginning to to move. And other indicator is also juniors. I own like probably some of the best names in the junior sector, and a lot of the juniors are still just moving sideways.
By
So
by juniors,
nothing
you
like
mean
2021. Yeah,
uh,
junior miners. Yeah,
like you mean like the exploration or the ones that are already producing but they're small?
both,
Both.
both. So a
Yeah.
lot of them, like the junior producers are doing better. Like I own, couple small junior producers, and they're not big names by any means, but some of them went up like 4x in the last. And I asked in some of the groups that I'm involved in, and they're saying, well, they like it doesn't really matter because they produce gold, right? And gold went up that much, so it's normal. And there's no liquidity, by the way, with these junior. Like what I mean is that sorry, not liquidity, no float. Okay, like very few like float of shares in the market, so it takes very little liquidity to get these prices up. Yeah.
Yeah.
So that's like I think we're just in the beginning.
Yeah,
really. And if you're in the right names of these juniors, is it like I mean, it doesn't take that much for it to go 2x, 3x, 4x.
yeah.
That's just my opinion. Yeah.
Yeah, and I mean, a lot of you who are watching are probably thinking, "Oh, can't you give us names?" But it's better for you to do your own research. And one thing I recommend, Eric, that I've done in the past is go through the prospectus of GDXJ or GDX and look at all the companies they own and pick a few from there. I think that's the best thing, and then get involved if that's what you want. So, Eric, thank you again for your time, and maybe one day I'll come and visit you in Hong Kong and pay for lunch like you did like a month or so ago here in London. And yeah, we'll keep in touch.
Well, thank you, Mario. I look forward to that day for you to come to Hong Kong.
Me too.
Thank you.
Take care.
Take care.